It can be very tempting to invest your money in something that is rising very fast. Bitcoin, artificial intelligence, GameStop. The financial media is full of stories of investments making huge gains. And you might want a piece of the action. After all, why should other people be getting rich and you not? The fear of missing out is a real thing, and social media can make this 10 times worse. However, you need to consider the risks. As many stories as there are of people making huge gains quickly, there are lots of stories of those making huge losses or people losing everything. Get rich quick investing is not a strategy you should use for your family's life savings. However, if you are still tempted, there is a way to scratch that itch with something called an investment playpen. And in this video I'm going to explain the concept of an investment playpen and why it's probably the best way to invest in some of this stuff risk-free. Make sure you stay tuned to the end of the video because I'll explain how I use my own investment playpen with my own investment strategy. My name's Carl Roberts. I'm a practicing regulated financial advisor and chartered financial planner. Welcome to the channel. In these videos I'm trying to give you the tools and pass on some of the knowledge so you can find your own financial independence and really enjoy life to the full. Now, the secret to true and long-lasting wealth unfortunately does not lie in get-rich-quick schemes. Proper investing involves investing your money across the great companies of the world, and for most people this will be via a portfolio of funds, and for some even one global equity fund will do. Now, this is more of a get-rich-slow scheme, which doesn't sound very exciting, but it's what works. Patience and consistency are key when it comes to proper investing. And this strategy will make you rich compared to the majority of people. Investing in global equity funds is not really risky. It will be volatile, meaning the value of your investment will fall and rise, sometimes quite significantly, but there's pretty much a zero chance you're going to lose all your money when it comes to investing in global equity funds. And you might want to have a look at my blog on the subject and a separate video I've done on the subject where it shows that actually the odds of investment success when it comes to global equities over the long term is very, very high and virtually zero chance of you losing anything. So I'd definitely go back and recommend watching and reading those. Now, I would say proper risk is the risk of losing all your money, either because the thing you invest in goes bust or it doesn't grow and keep up with the levels of inflation, which means you're losing money in real terms, you're losing purchasing power. Now, an investment playpen is essentially a proportion of your wealth that you allocate to invest in things that excite you. Things that might offer high reward but come with high risk. An investment playpen will give you structure to your investment strategy and will mean you don't have to worry about jeopardising your family's life savings. Now, with an investment playpen, you can join in those conversations with your friends, discussing your position in the latest investment craze, safe in the knowledge that you know the bulk of your family's wealth is in the one strategy that beats all others, investing in global equities. Now, how much you put in your investment playpen will very much depend on your own individual circumstances. And the best way to decide this is to ask yourself, how much are you prepared to lose? Because that's what happens. What goes in your investment playpen is essentially a bit of a gamble, and you need to be prepared that the downside is you could lose everything. What I would say is, as a rule of thumb, probably no more than 10% of your wealth should go into the investment playpen. In terms of what goes in your investment playpen, again, the thing to ask yourself is there a realistic chance of this investment asset going completely bust and losing everything? If the answer is yes, then it should go in your investment playpen. Now, let's run through some examples of potentially what could go in the investment playpen. So first up, we've got trading individual shares for short-term gains. So this is where you buy and sell stocks in individual listed companies on the stock market very quickly because you're trying to make a quick win. So you might invest into shares in a particular company with the belief that you feel the share price is going to rise very shortly, very quickly. So you might hold it for a very short period and then sell it. We would tend to call this trading rather than investing. And the same concept applies to trading currency or commodities. So again, if you're going to hold things like dollars, cryptocurrency, Bitcoin, or gold, or oil, anything like that, where you feel there's going to be a price change, sometimes you might hold these things for days or even hours, trying to make a quick win. Anything that looks like trading stocks goes in the investment playpen. Okay, next up we have buying shares in private equity companies. So these is companies that are not listed on a public stock exchange, so they tend to be startups. Buying shares in startups has a couple of problems or issues with it. One is that there's a very high going bust rate for startups. Not that many startups actually make it to successful businesses, so there's a good chance you could lose all your money. The other issue is that once you invest in a unlisted company, it can be very difficult to get your money back when you need it. You need to find a buyer of the shares, and because it's not publicly listed, there's not a great big market to sell. Now, this type of investing would also apply to startup funds, so things like your enterprise investment schemes, EIS, or seed enterprise investment schemes. Again, these should both go into your investment playpen. Now, one awkward concept is the lending to friends. So if you have a friend that requires some money off you, but they promise you a very good return, a high rate of interest potentially, this again is something that should go in your investment playpen. So a classic example I've seen quite a lot is where the friend is potentially a builder, or they're flipping houses. So they want some money off you so they can put into a property, they're going to sell it quickly, make a good return, and they're going to give you a share of that return. Again, put this in your investment playpen, because there's no comeback on your friend. If they get something wrong and then lose all your money, there's no way you're going to get it back, and you may have a damaged friendship as well. Now, a good phrase to always live by when it comes to investing is that if something looks too good to be true, it probably is. But if you're still tempted, put it in the investment playpen. Now, as promised earlier in the video, in terms of how I use my own investment playpen, I'll run through this now briefly. So I practice what I preach. Basically, the starting point is I do have a bulk of cash that I use to cover the next 12 months, 2 years, big expenses. And also there's enough cash there that would cover 12 months worth of our normal monthly spending. So that gives us some security. Then the bulk of our life savings, our family life savings, are invested in our pensions and ISAs, invested in global equity funds. We also have some junior ISAs for the kids, again invested in global equity funds. And then I have about 5% currently in my own investment playpen. So this usually fluctuates between 5 and 10% of our wealth, but it's around 5% at the moment in the investment playpen. And currently in my investment playpen, I have some shares in a few private businesses and also a little bit of Bitcoin. So that's what we're doing currently. But of course, everything we discuss in this video today, it's not advice. It's just for educational purposes. You do need to go and do your own research and find out what works for you. I hope you found this video useful. Please don't forget to subscribe to the channel, because the more subscribers we get, the more content we can make and potentially bring in some really valuable guests. Until next time, take care.